Hello, everyone. Welcome to this CGT spring update. We are now well into spring. It's scary how quick the year is going. But for this talk for the next hour or so, just under an hour, we'll be looking at post-budget developments and practical guidance for advisors. It's a little bit of a funny one because, of course, it was actually the October budget of 24 which sort of set the tone. And then we had the budget in November last year, which was just about an autumn budget. So it's almost a case of, well, which budgets are we going to be talking about? And it's, in a sense, it's sort of both, because it's the October 24 budget, like I say, which set the tone in particular for inheritance tax. And, the big change obviously being the restriction on 100% agricultural and business property relief. But there's been a few other points as well, which has been changed and tweaked. And I will be going through those and sort of building on some of those as a bit of a reminder as to what the issue was in the first place as well. So hopefully a little bit of an update and a little bit of a reminder all rolled into one. My name's Chris Thorpe. Some of you might have seen me do some of these MBL talks before. I do a few of these. Capital taxes is very much my thing. I'm in practice as well as a sort of agricultural advisor. So I do occasionally tend to use agricultural examples, and I may be touching upon them in here as well. So that's sort of where my bias is. But I've experienced very much the sort of private clients as well as the OMB, I'd say, as well as the agricultural sector as well. So hopefully this will be of use for those of you sort of having to deal with CGT and trying to figure out where on earth we are with things. Even though this is a CGT talk, I have just thought to give you a little bit of an IHT update. Certainly, in my experience, IHT and CGT are very much just different sides of the same coin. So I hope you'll forgive my going sort of off-piste a little bit, but I think it is very relevant. And I think those of you who are looking at CGT planning are probably doing so largely because of the IHT changes and lifetime gifting, which does of course involve CGT. So essentially we've got the nil rate band, and the residential nil rate band has been frozen till 2031. I think it was originally 2030, it's now 2031. The 325,000 and 175,000 respectively. The 325 nil rate band has been like that since 2009. So, we're getting serious fiscal drag issues here. So what's that? It's going to be, best part of 12 years it would have been frozen when everything else would have gone up quite a lot. And the 2 million threshold for residential nil rate band is also frozen as well.